Hi guys, how are we doing? Now tonight we're going to cover the industry which called Internet and Content Information Industry. Now this usually when we cover industries we take them from analytical company which called Value Line, and tonight we're not going to do that. Tonight we're going to look through the company an industry which is provided by Finviz. It's another analytical platform. And it's a bit different industry breakdown in that particular platform than in Value Line. That's what we're going to cover. Now, also we're going to look at one specific company which is included in that industry. The name of the company is MOMO, and it is a Chinese company, but it is listed on United States. Okay. Now, before I start, just please have a look at the disclaimer. This disclaimer just tell you that it is educational webinar, and even though we're going to look at the specific company and its real company, and some of you might take kind of a decision to buy it or kind of that specific business, but still you have to fully understand that it is kind of educational webinar, and you have to make your own decision before you kind of take all your responsibility. Okay, guys, please put tick or whatever in the chat that you understand it, and then we'll go further. Okay, a plan for today, the way we work, usually for people who just first time, first we are going to look at the general market situation, what is happening on the market currently, and what we can expect in the future. And then already we're going to look and analyze industry itself, and then already we're going to analyze that specific company. That's how we usually go. Okay, if you have any questions during the presentation, so you can ask in the chat, or you can add the microphone, turn on the microphone, and you can ask with your voice if you want to. And then at the end, I will tell you a couple news about in our academy, and then if you have any questions, you can ask them at the end as well. All right, so let's start from the kind of what is happening in the market. Okay, first, probably the biggest news, which we know already, it's the US election, and that we have a new president, Biden, there, and if you can see, the market reacted really positively on that specific news, and it's moved last Friday when they announced that Joe Biden is going to be a president. Market took it positively. Okay, we don't know what kind of new laws he's going to implement, what kind of policies he's going to implement, and how his terms will affect the economy in general. But as we can see right now, the indexes, they just jump up. Another news which came up yesterday, it was a news about coronavirus, that this vaccine which was approved has a 94% success rate, and we can now expect that they're going to vaccinate people with a high probability of kind of eliminating this problem. Now, again, how quickly we will see that is happening, we don't know yet, and we don't know how many companies are going to compete on that arena, but still, it is a good positive news, and a lot of people understand that if we have a vaccination, it means that there won't be any more lockdowns, like full lockdowns as we experienced already before. And as you can see, market kind of took it pretty nicely. So the jump was very, very high last night. And as we can see, Dow Jones, it's an index which includes 30 biggest companies in the United States by capitalization. We can see that at the moment, the price of this particular index, it's at the highest point ever in history. Okay, at the moment we can see 29,950 points. Okay, as for those who are new, this index, it represents the general economy. Okay, what had happened that they consolidated several companies in one specific index, and when we see that index is growing, the prices of this specific index grows, it means that majority of companies included in the index, they're also growing price. Okay, that's what it tells us. And as you can see, last night it's moved up, so it tells us that I mean the situation what's happening right now affects market positively. Personally, I believe that the market is too high right now, and when you enter in the market and when you open your positions, you have to look at this particular index as well, because remember the words which Warren Buffett was saying, that you have to be fearful when everyone is greedy, and now it is definitely the time, and you have to be greedy when everyone is fearful. All right, at the moment everyone is excited, and as you can see, the prices has just driven up quite a lot. So we always tell, if you see something like that, you have to be really careful with opening the market, because whatever goes up usually pulls back down as well. Okay, and if you open position at the peak, so you have to experience the fall and decline in your capital, in your portfolio, if you choose the wrong time to buy. And as you can see, at the moment, the whole index is pretty high. Now, if we look at the second index, which called, like, by the way, this is Dow Jones on a weekly basis. So each candle is 1 week here. And we can see that it is from 2011 here, probably. And it was an uptrend. And even we had this huge decline in March of this year. We kind of moved back all the way up, okay? And the prices moved all the way up and even higher. So now this is exactly the same index, and that's what we can see. At the moment, we kind of approaching the resistance level of the uptrend, which was going from 2011. We can see we at the resistance level, and usually those traders who base their decision on the technical analysis, they kind of start selling on those levels. So have to be careful. As you can see, that was the highest point where we slowed down here. We can see it was a kind of a level of consolidation, a certain period of consolidation. And then on Monday last night, we broke it through and moved up. Like, I mean, in America, it was a day. In Australia, it was night. Okay, so we had this move, nice move. So basically, it's testing this level. So, and quite possible we can pull back down. And I wouldn't be surprised if we go somewhere close to around like 26,000 or somewhere in between 26 and 27,000, which roughly about 10% decline. So we can easily expect that type of decline. Right? I wouldn't believe that we see decline like we had in March, but still, as I said already, whatever goes up usually goes down, and also there are fundamental, like, real reasons for that. I'm going to show them in a few slides later why I believe it might happen. All right, another index is Standard & Poor. Now this index is different. It includes 500 companies, which are like big size, small size, and medium size. So I personally believe that this particular index represents economy in general in a better way than Dow Jones, because in Dow Jones it's only biggest companies. Here it's all kind of different levels of companies. But if you can see, it's actually looks exactly the same as Dow Jones. Very often they move similarly in about the same kind of pattern. Now that's what we can see here as well. So last 2 days we can see this move up, and also for the last week it was a consolidation when people were waiting for results of US elections, and like the market was quite volatile, but still it was like, as you can see, around the same levels at the peak which we had in September. All right, now again, it is the highest point in history, and we might see certain pullback. And again, if we see these rolls, 1 roll, 2 roll, and 3rd roll, so it's quite easily can go down to around 3,300 points. All right, this is a Standard & Poor. And the third index is Nasdaq. And as you can see, it's a bit different in the move than previous two indexes. And we can see that at the moment we are not at the highest point. And there is a reason for that. Now, when we had all this fear about the coronavirus, and majority of businesses, they not majority, but a lot of businesses, they suffered quite a lot. But IT businesses, they actually, a lot of businesses from IT industry and technology industry, they improved their business because a lot of people started moving online, and they needed to improve their infrastructure for that type of layout in different companies, or like work environment and etc. So a lot of IT businesses actually improved, and people who investors in the stock market, what they started to do, they started moving money from the retailers which kind of were in trouble to businesses which were kind of booming. So, and that's why a lot of IT companies, they moved in price quite a lot. And even though their earnings improved during that time, for some companies they stayed as last year, but for some companies they improved, but the price move was much faster. The growth rate in price was much faster than growth rate in earnings. And that's why we can see that people understand that, investors still understand it, and they can see, and as you noticed probably, the price doesn't go right now as high as previous two indexes. Previous two indexes, they kind of now recovering that kind of growth because they were growing in different speed, okay, with previous. Now, again, we can see that it easily can pull down to the bottom of this yellow trend, okay, easily. So it's around 10,500, maybe 600 level, okay, so easily. And again, all companies which are included in that index, it's 100 companies, they in general will also fall in price when we see something like that. And again, all indicators, we can see they're in over bought situation. So, and most likely people start selling it off, and we can see the pullback. Now, this is different index called volatility indexes. Some people call it index of fear. And as you can see, the fear is really, really low right now. When this index is low, so the fear is low, it means that people are greedy and they are buying, they're not afraid of anything. And as I said previously, it's kind of a dangerous situation to be in, because if everyone is spending money, so you'd better to pull back and monitor it. Or maybe if you already have assets and you have profit already in those assets, maybe it's time to sell it, or maybe to sell a covered call and collect some rent on that, right? And remember that usually this index, not usually, most of the time it moves in different, like if it goes down, the whole other indexes, they go up, all right? So like in opposite direction. So when it's at the bottom, that's where we sell our assets. And when it's at the peak, when people are afraid and they're full of fear, that's where we become greedy and we start buying. Okay, this is about technical analysis of indexes, but I want to kind of back up my sayings by fundamental parameters, and one of them is P ratio. Price-earning ratio, for those who don't know, is a ratio which shows us the relation between the earnings and the current price of that particular asset. Now, as I said, that indexes, it's a conglomerate of different companies. So, and if we look at all companies within that index, they produce $1 of profit, how much people are happy to pay for that dollar profit, right? So, and as we can see here, Dow Jones Industrial Average, at the moment it's 29.4. So it means that for $1 of profit, like investors are paying $29 right now. Now, if you compare with the previous year, exactly 1 year ago, so you can see that last year they paid only $20. Okay, so at the moment they are paying what? It's nearly 50% more for the same dollar profit. Now the question is why? Can you imagine that last year, if you remember, there wasn't so many troubles in the economy? Yes, Donald Trump constantly was trying kind of to get over China, and they constantly kind of pull it back, tariffs or no tariffs, and etc. But still, the economy was in better shape than it is right now. There are a lot of stimulus which governments are doing, but still a lot of businesses, they are not operating in full capacity. Like, for example, if you look at in entertainment industry, if you look at travel industry, if you like hotel, all these kind of industries, cruise line industry, sporting industry, a lot of businesses, they are still kind of on hold. All right, they're not producing any profit, they're not producing any revenues, and they included, some of them they included in this index, and still we can see that the price for that index, so profitability dropped down, but the price of that index grew up quite a lot. So if you on the market for quite a while, you understand that in short period, in the short term, the prices, they're affected by emotions on the market, by news. Okay, and that's what personally I believe happening right now, because we can see a lot of positive news. People perceive pretty well the new president of the United States. They perceive pretty well that the vaccine is coming up. And they don't consider that actually the business is already there, like some businesses are in big trouble. And even if this vaccine is going to be introduced soon enough, still those businesses will suffer quite a lot. So we have to take it into consideration like investors. And in the long term, we will see the situation when those companies which are suffering right now, they're going to like announce their earnings. And when investors see that, oh my goodness, this company produces much less earnings than it was last year, what happens with the price? The price will drop down. And if this company included an index, so we will see the index goes down as well. And if it is a big enough company and we see the pattern, so we will see the decline of general market. And when something like that happens, it usually like triggers the fall. So that's what happened several times during the last few years. And I believe that it might happen right now as well, because the market is really overvalued at the moment, and a lot of big investors, like with huge amount of capital, they understand that. And personally, I believe that they're leaving the market quietly, producing all this news where mom and dads, like with small capital, they're putting their money and buying all these overvalued stocks, where like huge hedge funds, they're probably just offloading a position or hedging those positions right now. Now, if we look at two other indexes, so that's what we can see, Nasdaq. So it's IT stock. We can see it's 35, PE ratio is 35. Last year it was 25. So it's again 10 points higher, quite a lot. So S&P 500 is probably the highest point I've ever seen. It's 40, PE 40, where last year it was only 24. Now, guys, if you compare even, that was 1 year ago, but if you look at even last month, so you see the difference? So if Dow Jones right now 29, last month when we had the previous masterclass, it was 26. And look, Nasdaq now 35, it was 36. So Nasdaq is, you could see that it's dropped down, and S&P 500 was 38 and now 40. So two major indexes, they actually now is more expensive than they were last month. So it means that the earnings might stay the same level or maybe decline, but the prices, they moved up. So if you're considering to put money on the stock market, you have to be extremely careful right now, because if the market start pulling down, and even if you find a fantastic company, great company, even if that company is undervalued, still when everything goes down, they kind of pull down, and good companies and undervalued companies as well. So, and if we see that market can go down roughly 10%, so you can definitely expect that if you want to buy something, and when it happens, you will be able to buy it cheaper, maybe 10% or even more. All right. This is generally about the overview of the market. So guys, put from 0 to 10 how you understand it. If you have any questions, please ask. And if you have any comments yourself, so you also can let me know, and I just have a look at your chat. Okay, 10. Okay, Max wrote that Tesla is now included in S&P 500. Okay, fantastic. Okay, great. Okay, great. So guys, if you don't understand something, don't be scared, ask questions. So that's why we run these master classes. Of course, usually these master classes, they kind of closed for our investment club members only, but due coronavirus, we've decided with my partners and our investors just to open it for everybody, because I understand it's quite dangerous thing right now on the market if you don't know what you're doing. And kind of it's my personal desire just to help that just give this information, just express my opinion, and just to prevent this fall, because I know how people usually act when something like that emotional happens and they believe that everything is rosy and great. They start buying the stocks, which actually dangerous to buy, even if the company is fantastic. Remember last year, Facebook, when it was at $220, it dropped to somewhere close to $130, $120. So it's like even a fantastic company like Facebook with good earnings, good growth rate and everything still could drop nearly 50% in price. And a lot of people, they would devastated. They didn't understand what was happening at that moment. And of course, kind of it creates a lot of fear on the market. Very often people just sell their stock at a lower level, and after that, they never touch the stock market again. Now, if you waited, now the Facebook nearly moved up back to $300. So if you were patient enough and you patiently waited, so you would make all your loss, which you had capital loss, but then even you had a profit. But you need certain understanding that your particular stock which you will buy actually will move up back. Okay, so and not so many people know that. All right.
Sorry, can I ask one question?
Yep, sure.
Yeah. For the Dow Jones and the S&P 500, we can see it's already breaking the previous highs. Actually, it's already historical highs.
Yes, correct.
And you just mentioned once it's reaching the highs, it will expecting it to coming back, right? But I was told by someone saying that once a stock price or any index prices goes high, break the previous highs, it is the best time to buy it, because if you've set a stop loss at the previous highs, you have really minimum loss on that trade, but you have potential which is infinity gains above, because there's no limit above the high.
Okay. Okay, I got your question, and it is a strategy, and it's used. It's called breakthrough strategy. When you're looking, there was a pattern noticed. When I explain it, it's like imagine that you have like the building, right? And you have different floors there. And one strategy is like that. So if you take the ball, right, and you hit the ball, and it hits the floor, from the floor where it goes, it goes to the ceiling, right? And then hit the ceiling, and where does it go? It goes to the floor, and it's kind of start bouncing between floor and ceiling, correct? And when you see something like that, you understand the pattern, you start making money. So you buy it at the floor, and then you sell it at the ceiling. But what happens that there is a hole on the ceiling, and when it breaks through the ceiling, and you can see it appears above the ceiling. So where does it go? It goes to another floor ceiling, right? And then when it bounces down, so it goes to the floor of the next kind of apartment level, right? So, and that's what a lot of traders, they noticed as well. And it is happening. It is the strategy, and you're absolutely correct. So it's called breakthrough strategy. So it's when it breaks through this resistance level, it goes all the way up. So usually it's in the same pattern as the previous floor, but usually you require certain fundamental reason for that as well. Okay, so usually it happens with different companies or currencies, and when you trade on that, but still all these guys who trade based on technical analysis, they have one important protection, which is stop loss, right? You understand? Majority of people who are here right now, they're value investors. We try to understand the value of the business. We understand what this business, what kind of potential it has for the growth. So we looked at it not only just based on the technical analysis. Yes, I still show the technical analysis, but we try to understand what is actually happening within that business. And when we're going to touch that specific company, you will understand that as well, how we operate. And yes, technical analysis is important, but I personally believe that what is happening within the business as a business is much more important than all these graphs and everything. It's just historical representation of the price move. Okay, and as I said already, the price can be influenced by the media, news, politicians, or whatever happens in the market. I don't know if I answered your questions, but
it helped. Thanks a lot.